Welcome back to another edition of Mining Metrics. I am joined once again by Kaan. And before we get into the episode, there has been cosmic universal things that have happened. And no, I'm not talking about Ross. Everyone knows Ross is free by the time you're watching this or you're watching the recording. The other thing that has happened is it is Kaan's birthday. Now, I will say you should not guess how old Kaan is. I did that before we went on, and I feel like I've offended Kaan. So if you don't see us for the February mining metrics, you know why. But anyways, Kaan, happy birthday. What are you doing to celebrate your birthday? We're in the bull run. It's 2025. What are you doing?
Thanks so much, Jarrett. Great to be back. There's no other way to celebrate than to talk about Bitcoin mining. Later tonight, I'm going to hang out with my twin brother. We'll probably have some steak, play some heavy music, train some jujitsu. So it should be a good day.
That I didn't know you had a twin brother. Well, this is good.
Yes,
You can tell him the number I guessed off mic, and he'll be equally as offended, and he'll tell you never to come back on this show. um,
absolutely.
Very cool. Playing some music. I see you got the guitar on the wall. I've actually never brought that up, but it sounds like you know into some music and then getting down on the mat and rolling. That sounds fun. Um, if you're ready, let's go ahead and let's dive right into this mining metrics. And before we do, actually, I just want to give the caveat. Normally, we have certain a flow of a presentation that we're trying to look at month over month when it comes to metrics around mining. This show is a complete, live collaboration between Luxor and Compass Mining. And normally we have set things X, Y, and Z that we're going to look at month over month. So we can also then at the end of the year have an end of the year show and say, hey, wow, it's crazy to have seen all these things change throughout the shows month on month. But this episode particularly, we are going to be diving into the Bitcoin mining review of 2024 that Luxor has actually just launched today. So do you want to take a moment just before we get into kind of talk about what that looks like? And hopefully someone on my media team will go ahead and post that link underneath this live so we can see it. And if not, I will post that later. That link just came out and we've posted it on LinkedIn and I believe on X. But yeah, do you want to talk a little bit about what that looks like?
Absolutely. Thanks so much for this, Jared. Like you mentioned, Hashrate Index just released its 2024 year in review Bitcoin mining report. This report is a massive document with a ton of alpha covering a wide range of concepts around Bitcoin mining, all the way from the public markets to capital markets to trends around institutional adoption, hosting rates, energy markets, pools and firmware, and obviously hardware and ASICs. So you can find this document on our Hashrate Index blog webpage, and we're going to cover some of the main key trends that we've seen throughout the year in this session. So I had to take a seat for this one and buckle up because we're about to take an intergalactic journey throughout 2024, which was an absolutely massive year for the Bitcoin mining industry.
I too agree that it was a massive year, and only I think in hindsight did I realize how massive it was going through the slides that you've prepared today, the presentation. It's crazy to think that it's like a friend that you grew up with in high school or college or however long ago that was. For some of us, not as long as others, apparently, because Kaan is on the younger side that I just found out. But it's like the halving is it's so far away, but at the same time, I feel like it was just yesterday that I was literally at the rehearsal dinner for my cousin's wedding in Charleston. Everyone's talking and I'm over there in the corner on mempool like, oh, is it going yet? Is it happening? Is it happening? So it feels like ancient history, but it also feels like it was just yesterday. And actually, while you were saying that, I went and posted. So if you're watching this on X and you're in the live stream, you can go down in the comment section and I did post a link where you can go download the Bitcoin mining review that Kaan has just kind of laid out. But yes, I'm ready. Let's go. Let's dive in and let's do January mining metrics.
Sounds good. Let's do it. So, taking a look at our agenda for today, first we'll cover the storyline, the TLDR for the whole year. We'll then go into hash rate markets, talk about what happened to hash price and its constituents. We'll then take a look at the hardware side, talk about ASICs, trends in prices, and how the market has changed over the year. We'll then move on to capital markets, talk about the financialization of Bitcoin mining, which was a massive theme throughout this year of 2024. We'll talk a little bit about public miners, what the equities are up to, some financial performance, and also some operational updates. And finally, we'll close off by looking forward and what we think the Bitcoin mining landscape will look like going into 2025 and 2026.
Just before you go ahead, as we also look forward, I want to share this. This is from Cameron Morrissey at Compass. He's, tagging in here from YouTube. He says, "Happy birthday, Kaan." So hopefully we'll continue to see those. I'll bring those up as it comes. It's a rare time when we're going to be doing a mining metric also on the date of one of our birthdays. So yeah.
Thank you. Thank you so much. All right, let's dive into it. TLDR. There were a few big themes that took place throughout 2024, which highlighted some of the key trends. So Q1 can be summarized essentially by the advent of spot Bitcoin ETFs. These started trading on January 10th, which coincides with the infamous Hal Finney tweet when he said running Bitcoin many years ago. And throughout the year of 2024, Bitcoin ETFs amassed over 100 billion US dollars, which is 1.3 million Bitcoin. Looking at this from a big picture, this shatters absolutely all records when it comes to ETFs. And this has set the stage for Bitcoin as a financial phenomenon, which has now become mainstream. So this was the big storyline for Q1, the advent of spot Bitcoin ETFs. Q2, obviously, we talked about the halving. As we all know, it took place on April 19, 2024 at block height 840,000. Similar to you, Jarrett, I was watching this on mempool as it happened, much like all the other Bitcoiners. We know that it was an incredible block, over 37.5 Bitcoin in transaction fees, which is equivalent to $2.4 million. Coming out to a total block reward of 40.75 Bitcoin. And this set the stage for the next mining epoch, which we are now in. So Q2 was all about the halving. Now, Q3 was somewhat silent. Bitcoin price oscillated around the $64,000 range. Not much was going on. There was some adjustment post-halving taking place as the mining industry was digesting the effects of the halving. But as we look into Q4, the main story was all about institutional adoption of Bitcoin, specifically from the corporate and political domains. What do we mean by this? Well, we know that Bitcoin as a treasury investment became a massive storyline throughout Q4. Corporates across a wide range of industries and sectors started buying Bitcoin and holding it on their balance sheet. As we can see, over 150 entities hold over 3 million Bitcoin at the moment, which represents 14% of the total supply. This is an absolutely massive increase when it comes to the adoption of Bitcoin. Likewise, what we're seeing on the political sphere is that Bitcoin has become a massive talking point, specifically when it comes to strategic Bitcoin reserves at the nation state level. So the game theoretic application of Bitcoin is playing out at a much faster pace than what some of us may have expected.
Can I ask a question about this particular slide? You have there, both at the top, the entities holding of the 156 and then the 3 million Bitcoin that are being held. The sliver that is like grayish blue, and it says DeFi and smart contracts. Do you know, can you break down what that is? Is that like wrapped Bitcoin? Is that some of the CB, BTC that I know Coinbase has if you're taking loans? Is that what that is?
Exactly. Yes, that's correct. That's exactly what it is. That refers to wrap Bitcoin and Bitcoin being put to use in other, the wider crypto sphere besides traditional financial markets and the Bitcoin blockchain itself. That's correct.
Okay, cool.
Awesome. So that is in a nutshell what happened in 2024, an absolutely massive year when it comes to the adoption of Bitcoin. Now let's take a look at mining economics. In total, the year of 2024 witnessed just under 15 billion in Bitcoin mining block rewards, which is a 40% increase in US dollar terms. This translates to 233,000 Bitcoin, which is a 35% decrease in Bitcoin denominated terms compared to 2023. Overall, transaction fees constituted 5.6% of the overall block reward. Compare this to 2023, we were at 7.6%, so a slight decrease. Now, if we take a look at summary statistics, we can see some big changes in some of the major mining metrics that we keep track of. Hash price, US dollar hash price, started at around $99 and ended up at around 55. This is around a 45% decrease. Bitcoin denominated hash price was down by around 75% throughout the year. Bitcoin price was up by over 120%, a stellar performance. Network hash rate grew by around 50%. Network difficulty was up by around 60%. Transaction fees slowed down. They were down by around 30%. And as we all know, the block subsidy changed from 6.25 to 3.125 Bitcoin per block. Now, taking a look at hash price. So as we mentioned, hash price entered the year at around $99 and fell by 45% throughout the year. We ended up closing the year at just around $54 per petahash per second per day. By comparison, throughout 2023, hash price had actually increased by 65%. And the average hash price that we saw in 2024 was around $64.50 per petahash per second per day versus around $75 in 2023. So we are seeing a 14% decrease in the average hash price year on year.
And one of the things I wanted to ask about that was, I assume that average is totally skewed. I mean, I feel like this is going back to mean, median, and mode from whatever 7th or 8th grade, but it feels like that average hash price in 2024 was totally pulled up by the month in and around the halving, or like the couple weeks after. Is that accurate? I mean, that's what the graph says visually, but is that what you're also seeing, behind it with the numbers?
That's exactly correct. If I go back to this slide, what we see is hash price, US dollar denominated hash price. If you look at the very right, you'll see a high of 139.14. And that happened right at the halving and then immediately went back down. So we saw this very short stint of craziness, which took place. Hash price peaked at around just under 140 and then immediately started adjusting back downward. So that's exactly correct. All right. As we mentioned, Bitcoin had a stellar year throughout the year. We started off at 43K. We peaked at 108K, and then we trailed back down to 93 by the year end. Overall performance was around 120%. Network hash rate, as we mentioned, experienced relentless growth. The 7-day average hash rate grew by 52% from 529 exahashes per second to over 800 throughout 2024. The average 7-day hash rate for the year was just under 640 exahashes, which is a 67% increase from 2023, which saw an average hash rate of 380 exahashes per second. Similarly, the 30-day average was 630, which is a 78% increase compared to 2023. So as we see, the blockchain continues to become more secure as more miners participate in the proof of work consensus mechanism and transform cryptographic computation into decentralized cybersecurity. So it's never been as secure to use Bitcoin as it is right now.
Can we stay on this for a second? I want to ask you a question, and if anyone's watching, you can go ahead and leave this in a comment, whether you're watching on YouTube, LinkedIn, or X. We had a discussion on Talk Mining Tuesdays, which is a weekly X space that I run with Brad James. And we had thrown out, this must have been 2 or 3 weeks ago, we were talking about where we think global hash rate is going to go in 2025. And I want to get your take on this. We haven't, you and I haven't talked about this stuff in a minute. So we put up a post and we had four different numbers that people had come up with. And you can choose which one you think you're closest to. Unfortunately, the poll is now dead, but I mean, I guess I could put the poll up again, but it's 979 exahash, 1150, 1198, or 1300. Where do you think, or you could actually tell me what you think your exahash, estimation or prediction is for 2025. And then and I'll tell you how the poll broke down. So where do you think it's going? Because looking at this, I mean, you've just said it's from 2023 to 2024, it's gone up, it feels like orders of magnitude. So where are you thinking for 2025?
That's a good question. So by year end 2025, I'm going to go with 1150. And we will get into this at a later stage for this session, but I'm curious to hear what the breakdown is.
So the breakdown was 979 was only 10%, and that was the most bearish. 1150 got 21%. 1198 got 22%. So basically, most people, you could split that difference, and more than 40% are basically in the middle. So you could call that like what, 1175. And then, however, 47% of people voted for 1300. So clearly, there are some crazy Bitcoin mining bulls out there. Now, I want to say the 979 was given to us by our chief mining officer, Shannon Squires. And a lot of his reasoning was just that, like, some of the hash online, maybe, some of it may divert into AI, but one of the biggest things he's kind of called out, and I think is an interesting narrative to continue to watch, is we may not just have the actual infrastructure, the energy infrastructure to be able to get that much hash online. And he was just talking about transformers and how long that process can take. And then he didn't say this, but or at least I don't remember he said it. And once again, some of these things are kind of, it's all in my head, all these different spaces we've done. But then you lay on top of that the geopolitical implications of potential tariffs from China and just overall trade frictions globally. And you could definitely see how that could impact the global hash rate and where it maybe does go or doesn't go. So anyways, all right, you're on 1150. Good to know. I wanted to ask you. So you're with 21% of people. But yeah, anyways, please continue.
That's awesome. I love the number 21. It's a lucky one.
It is one. Very lucky.
All right. So taking a look at network difficulty, as we mentioned, hash rate grew by over 50% throughout the year, which also means that difficulty had an incredible growth rate as well. So hash rate and difficulty marked an all-time high of 805 exahashes and just under 110 trillion respectively. As we know, these grow in lockstep with each other. So once again, it's never been more difficult to manipulate the Bitcoin blockchain as it is right now. Now, turning to transaction fees. We talk about transaction fees a lot. We tend to know that it's volatile, fees come and go, it's unpredictable. So what did we see in 2024? As a whole, we saw strong US dollar denominated transaction fees totaling $920 million for the year. This actually surpasses all years up to 2017, except for 2021, which saw just over $1 billion in transaction fees. However, the year was heavily front-loaded. 80% of total fees were actually generated in the first half, which was driven by ordinals, BRC20, and Runes Mania. H2, the second half, in contrast, was sluggish. We only produced around 180 million in transaction fees, which represents 20% of the year's total. And this was because interest in alternative on-chain activity essentially dried up.
Do you think that's coming back? Just before we go ahead, do you think that's coming back? Ordinals, runes. Obviously, when that happened, transaction fees are great. They're great for miners. Do you think that's coming back?
It's a good question, and we talk about this a lot with our derivatives desk at Luxor. We do see that there has been a shift in the transaction fee market dynamics. We would historically expect Bitcoin price action, bullish action to also drive on-chain activity and increase transaction fee collection. However, throughout this year, we saw that has diverged and changed from empirical observations. So what we're thinking about right now is that there may be a fundamental shift when it comes to how the transaction fee market is behaving. And it may have to do with some of the software protocol changes taking place on Bitcoin. Bitcoin improvement proposals such as Taproot, for example, these are meant to make the blockchain more efficient in terms of financial transactions. So we may be seeing some effects coming from the software side, but we do also expect the alternative use case to pick up throughout 2025. So we do believe that transaction fees will end up slightly higher than 2024, just because it has been an outlier in terms of historical observations.
So, okay. So you think in 2025, we're going to have higher transaction fees. That's like total transaction fees over the 12 months?
Yes.
because that's interesting, because you've said that only in 2024, the only year to have had higher transaction or more transaction fees denominated in US dollars was 2021, which cracked $1 billion. So you're
Yes.
probably saying that we're going to crack more than $1 billion in transaction fees, and we don't have the halving. So it's going to, ideally, when we look at this next year, it's not going to have this huge, obvious, elephant in the room, which was April, right? With the halving. It should just be generally overall higher month on month, like significantly higher, especially when you look at July and August and September were pretty dark. And even in September, I was looking back at some tweets, and, Bitcoin's in 40K. The hash price was in the basement. It was not a bullish time for Bitcoin or Bitcoin miners. So, okay, that's good to know. That's been said. Now we're probably looking plus $1 billion, 1.1, 1.2 something, but definitely outdoing 2024 and potentially even outdoing 2021.
Exactly. We'll see. And we'll touch on this in our final section as well. Transaction fees are always a wild card, and they remain to be a wild card. So we'll see how it plays out for 2025. All right. So talking about the block subsidy, as we all know, the halving took place in April. We've now entered the 5th mining epoch for Bitcoin. This will last from block height 840,000 to 1,049,000. Throughout this time frame, miners will receive 3.125 Bitcoin in terms of the subsidy portion of overall block rewards. And we expect the next halving to come in at sometime around April 2028. So all in all, as a result of the halving, declining transaction fees, and higher network difficulty, all of this came to push BTC denominated hash price down quite sharply. Bitcoin denominated hash price entered the year at 231,000 Satoshis per petahash per second per day, and it fell by 75% throughout the year, closing at just under 58,000 Satoshis per petahash per second per day. So all in all of this culminates into a divergence between Bitcoin's price action and mining markets. Why is this? We have record high network difficulty, historically low transaction fees, which the combination turned out to weigh more heavily on mining economics than the bullish price action we saw when it comes to Bitcoin's performance. So as we can see, hash price is down. The mining index, hash rate index, is crypto mining index, which is a benchmark that we use to measure overall public Bitcoin mining performance, is also down by around 40%, whereas Bitcoin price is obviously up compared to peaks from 2021. So this divergence we see between Bitcoin and mining markets, a la hash price and public mining equities, is showing up because of all of the factors we just discussed when it comes to hash price and its constituents.
Do you think this continues? What are you guys at Luxor thinking as you, and I know I may be jumping ahead because I know we do have the looking forward, but with this specific dynamic and relationship between the hash price, the BTC price, hash price, BTC price, and you have the mining index. How do you think that this relationship is going to evolve moving into 2025?
It's a great question. And this is where another key trend comes in for us at Luxor. What we're looking into for 2025 is the race between Bitcoin and growth in hash rate and difficulty. These forces have been grappling with each other throughout 2024. And so far, what we've seen is that hash rate and network difficulty growth have been able to outpace Bitcoin price action to the point where it depressed hash price. Whether this changes or not will heavily depend on what happens in the mining market when it comes to regulation. As you mentioned, import tariffs may have a role to play, how global hash rate distribution changes across the world throughout the next year, and how competitive mining remains. So it's an open question that we're excited to see play out. All right, let's now move on to ASICs and hardware. So before we get into it, Jarrett, I do want to mention, just to put things into perspective, behind here you see an S19J Pro Bitcoin mining ASIC machine. I like to showcase what the Bitcoin network means when it comes to the actual ASIC market through a very simple calculation. So by the end of the year, we estimated that global network hash rate was around 800 exahashes per second, and the global network across the world was pulling in about 30 gigawatts of power. Now, this machine, the J Pro, has a hash rate of around 100 terahashes per second, and it consumes around 3,000 watts per unit. Just do a very simple back of the envelope math calculation. What this amounts to is that if we were to take this S19J Pro as a representative unit of an ASIC that is online and hashing right now, it comes out to 8 million units of ASIC machines distributed across the world, simultaneously performing cryptographic calculations and protecting the Bitcoin network. This is what sets Bitcoin apart as a technological marvel because of the unprecedented scale in distributed computing. So it's an incredible social experiment, and it's proven itself to be the most powerful computer network in the world because of this feature. So now that we've mentioned this, let's see what the actual market in practice looks like. This chart below shows an estimated breakdown of Bitcoin network's hash rate per ASIC model. This is from Coinmetrics mine match data. What we see is that the S21 continues to gain market share, but it's still relatively minuscule. Throughout the year, the S21 increased its penetration from 1.5 to 5%. So this new generation model is slowly being introduced into the network. In comparison, the S19 series saw a relative decline. The XP's market share fell from 15 to 13% over the year, and the S19J Pro fell from 29 to 21%. Now, when it comes to price trends, what are we seeing for ASIC prices? Our ASIC price index highlighted a significant price decline for old generation machines over the year, indicating a gradual phase out of relatively outdated hardware, as we just mentioned. Mid-tier ASICs, so these range from 19 to 25 joules per terahash, experienced a 5% annual decline throughout the year, with occasional rebounds throughout Q2 and Q4. And this is suggestive of intermittent demand before and after the halving. When it comes to the least efficient ASICs in our index, which is a range from 25 to 38 joules per terahash, these machines suffered a steep depreciation at 68% annually, with sharp drops throughout Q2 and Q3, and a dramatic 50% decline in prices for September of 2024. So as we mentioned, what we're seeing is that older machines are gradually being phased out, and valuations for these machines is dropping as new machines enter the ASIC market.
If I could, I want to just say something. If you're listening and you're watching this and you're on X, LinkedIn, or YouTube, where we are, and you have a question about, especially when it comes to hardware or any of the hash rate or the hash price or anything that we're talking about, go ahead and leave a comment, and we will do our best to go ahead and answer this. We will have a Q&A at the end, but if you have a question that's very pertinent to a slide that's up right now, please go ahead and leave that in the comments. And I actually forgot to share this earlier. I'll share this now. This is Chriselle on our media team. She says, "Happy birthday, Kaan." If you're just checking in, it is Kaan's birthday. Very exciting. He's happy to be here on Mining Metrics talking about this. And also, if you're listening on LinkedIn and or X, know that we have left the link that goes to the 2024 Bitcoin mining year in review. It's called New Horizons, and there's going to be an image. Not to spoil the presentation, there will be an image later. Go ahead and click that, and you can get that full document. And this, much of what we're talking about today, touches upon these larger themes, but to get a little bit more granular, go ahead and download that document.
Thank you so much, Chriselle. Okay, so now moving on to S21 premiums. So throughout the year, S21s, the newest generation of ASIC machines, saw consistent premiums. Premiums were relatively small in Q1, but began to rise towards the halving and really took off after the halving in April. They peaked in October at a whopping 1,300% over used older generation ASICs, for example, the S19 and the M30. This gradually declined as Bitcoin broke above the 100K level, but it started to resume into the new year as well. So now, Jarrett, in our previous episodes, we've talked a lot about Bitcoin mining ASICs and some of the mining metrics when it comes to understanding performance, returns of investments on ASICs. And one thing that we mentioned was the payback period. What we saw was that relatively older machines throughout the latter end of the year were actually entailing shorter payback periods than newer generation machines, which may indicate that it makes more sense to buy these machines if you can find them at the right place, at the right price, with the right mining economics conditions as well. So the question is, why did the S21 carry such a massive premium throughout this year? And the answer is multifaceted, which we'll get into right now. The main point, yeah, go for it.
Yeah, sorry. I just, before we dive into this, I think that this is actually one of the more fascinating things. And if I will make sure to leave the link somewhere, but the first mining metrics we did back in November, this was one of the more fascinating parts and statistics that you had brought up. That was like, some of the older generations compared to the newer generations actually could be more potentially financially attractive depending upon obviously what your strategy is and your payback period. And so this graph is wonderful, and I'm glad that we get into this, because a lot of people who are hopping in now into mining, they may be doing it because they're trying to time the market. And so keeping these things front and center is really important. I also wanted to bring up this comment from Gandalf the Gray on YouTube. He says, Compass Mining, what is the current cost of hosting? Gandalf, I am working with the media team. We're going to drop a link to you on YouTube so you can go ahead and check that out. It gives you a lot more information about how we calculate hosting fees. But that's a great question. So yeah, Kaan, sorry, back to you.
Awesome. All right. So yeah, the main question is, if relatively older machines have shorter payback periods during the current hash price conditions, then why do newer generation machines carry such massive premiums? And the reason really lies behind the energy adjusted hash price. So this is a metric that we released recently on Hashrate Index's website, and it expresses the revenue a Bitcoin mining machine earns per unit of electricity consumed rather than per unit of computational power. So it incorporates ASIC efficiency into hash price, allowing for comparisons of how efficiently different mining machines turn electricity into Bitcoin. And this is really what matters when it comes to measuring revenue generation for different machines. What this chart shows us is that pre-halving, mid to old generation ASIC operators managed to sustain competitive margins, but their earnings per kilowatt hour were under pressure as hash rate continued to grow. Leading up to the halving, this pressure increased, which forced some operations to upgrade their machines as efficiency gaps widened. And post-halving, the situation really deteriorated for mid to old generation miners, pushing many to break even or even unprofitable levels. By contrast, what we see here is that next generation ASICs, which have under 19 joules per terahash in efficiency, they retain stronger margins, which allow them to sustain operations profitably for longer despite declines in hash price. So that's one main reason. The fact is that per unit of electricity consumed, newer machines produce more revenue compared to older machines. There are other reasons as well. For example, older generation machines tend to be more sensitive to import tariffs and transportation expenses. Next generation ASICs are also essentially a way to future-proof yourself because they're more resilient to changes in network difficulty. And public miners, large-scale professional industrial companies, are also valued based on their overall fleet efficiency, which drives up new gen prices and coincidentally also reduces demand for older generation machines, which gives private mining companies or smaller scale operations an opportunity to acquire them at discounts as well. So the main message here is, despite longer payback periods, operations that prioritize long-term stability and cost efficiency over multiple mining cycles tend to favor newer models, which is why we see this consistent premium throughout 2024 for the S21s.
And a premium increase that I believe we will continue to see as we get into Q1 2025. Is that what you're seeing as well?
Yeah, potentially. If we extrapolate the current trend, that's what it looks like. Like I said, the premium was quite consistent throughout the year. It increased a lot right after the halving and before. But Bitcoin price action somewhat was able to compress it a little bit, although we still do see it trending consistently. All right, let's now move on to capital markets. Let's talk a little bit about the financialization of Bitcoin and Bitcoin mining. So when it comes to equity financing, public miners consistently tapped into ATMs, the at-the-market equity offerings throughout the year, raising over $5 billion through equity raises. Having spent the first quarter paying down debt, miners strategically borrowed $700 million after the halving to continue raising capital for expansion. And as we mentioned in our previous episode as well, Jarrett, what we've seen is that public miners significantly increased their use of convertible notes to raise capital towards the latter end of the year, collectively securing over $5 billion since June of 2024. Now, of course, this playbook comes from the heels of MicroStrategy's notorious Bitcoin strategy, which itself raised over $7 billion in convertible debt throughout the year.
Can I actually ask a question here?
Yep.
And it's a little bit different from where we are right now, talking about some of the financials behind some of the pubcos, but I think it's a very valuable question. It comes from Gandalf the Grey. He says, I think should read, taking into account the large group of ASICs you have to draw data from, what ASIC is more reliable? It has been said that WhatsMiner ASICs are built to last longer and less failure than, and then this is another one, failure rates than versus Bitmain. So a couple questions there. Yeah, which one is the most reliable? And then between WhatsMiner and Bitmain. And once again, I don't know if you want to say live on air and choose one, as opposed to maybe speaking to more of a philosophy around the miner resiliency.
That's a question that I don't really have insight to because that falls out of my realm of expertise. I'm all about reading and writing about Bitcoin mining. I've never dealt with hands-on operations at mining sites. So I really don't have experience with actual physical hardware when it comes to reliability and that sort of stuff. So I wouldn't be able to comment on that. But what I can say is that it obviously depends on the conditions, location of your mining site, your cooling method. There's a lot that goes into it, and there's a lot of complexity and sophistication around setups for physical infrastructure and mining operations, which can improve the longevity of your machines.
The other thing I want to say is I'm going to tap in with our mining ops team and I'm going to ask them this question. So Gandalf, I'll be sure to reply through YouTube from the Compass account later with an answer. And I'm also going to take this answer and share it on X because this is a question that many, many people have. And one of the things I will say, I think a sourced, if you want to source the majority of people, you could probably just look at what are the brands that are most used across pubcos, right? I think that would probably also give you an idea for reliability. And I don't know if we get into that now on this presentation because this is more of a review of 2024, but I do know normally in our monthly cadence on mining metrics, we do look at the amount of, ASICs being deployed in the brands and stuff, and whether it's what's the word I'm looking for? The type of ASIC, I guess I should say. So, yeah.
All right. So now let's take a look at some M&A action. As you know, Jarrett, 2024 was a big year for mergers and acquisitions in the Bitcoin mining industry. They were mostly marked by geographic expansion, infrastructure consolidation, and strategic energy acquisition. So a lot of the themes that miners pursued when it comes to deals was around enhancing operational efficiency, getting access to energy infrastructure, and getting access to hosting capacity. So among the cohort of 11 publicly traded mining companies that we track at Hash Rate Index, we saw 7 of them engage in notable deals for M&A. And overall, the industry itself raised over $10 billion. So 2024 was really a massive year when it comes to capital markets activity for the mining industry. All right, now moving on to public mining equities. Let's talk a little bit about what the public markets have seen in terms of observations for 2024. So, starting off with production numbers pre and post halving. General insights: the cohort of 11 publicly traded mining companies that we track collectively produced over 46,000 Bitcoin in 2024. A couple of these miners were effectively able to maintain their pre-halving Bitcoin production levels. And the way they were able to achieve this was by expanding massively over the year, pursuing aggressive inorganic growth strategies through mergers and acquisitions. Now, when it comes to financial performance, generally speaking, at a very high level, we saw that public Bitcoin mining companies experienced divergent fortunes in 2024. So as we mentioned previously, we have our hash rate index crypto mining index, which is a benchmark index that takes into account over 60 publicly traded companies affiliated with the Bitcoin mining industry. Overall, the crypto mining index posted a 35% return in 2024. And the average return from our cohort was just under 60% by comparison. However, we saw a 50-50 split between over and underperformance. So 6 of the miners we track outperformed the index, whereas others underperformed in terms of price action. When it comes to correlations, we saw some interesting observations take place throughout the year. As we mentioned, we saw this divergence between Bitcoin and mining markets, which is suggesting to us that the equity market perceptions rather than Bitcoin price may be dominating miner valuations at the moment. Generally speaking, this may also mean that participants are becoming a little more sophisticated when it comes to analyzing and valuing certain Bitcoin mining companies based off of their idiosyncratic differences when it comes to operations and the way they interact with the Bitcoin mining landscape. So we see that a few pairs of miners have posted strong correlations. However, many of the relationships are actually weak to moderate in terms of correlations. And what this means is that there's diversity in operational models, strategies, and responses to the market from within the industry. Another interesting observation is that Bitcoin's correlation with most companies for this year is actually close to zero, which is surprising. It indicates a low relationship between Bitcoin price and stock performance for these mining companies. So what this means is that other factors beyond Bitcoin itself may now be taking more of a weight when it comes to valuation for these companies, things like operational excellence, for example. So these are some high-level observations that we were able to capture throughout the year, which I think was interesting to point out. Any questions?
Yeah, I mean, this is one of the more fascinating visuals that I think you prepared for mining metrics, for this episode, because saying that there's a divergent, that they're not correlated is absolutely fascinating, because I think when people think in TradFi and they think about Bitcoin or Bitcoin mining, they just think about MicroStrategy. And MicroStrategy stock has really kind of gone up in lockstep with Bitcoin price. Not always, but it feels like that's the thing that's correlated. They're not looking at the operational excellence, for example. I mean, what MicroStrategy is, and I may get in trouble for saying this, but like what MicroStrategy is kind of just like a Bitcoin miner that doesn't mine Bitcoin and just has a hodl. That's it, right? Like from what I understand. So the other thing, and I wanted to ask you about this correlation, one of the other things beyond operational excellence, how much of a role do you think AI plays in this as far as diversification of compute away from Bitcoin mining?
That's an excellent question. And in fact, we have a whole section dedicated to this concept in our full report. So I'd highly suggest that you check that section out to get our full scoop on what we think is happening when it comes to the intersection between Bitcoin mining and AI HPC. But it's a great point. As you know, some of the companies in this correlation matrix have well diversified operations into AI and HPC, and they tend to generally entail higher valuations, which means that the equity markets are placing a relative premium when it comes to miners who are able to deliver on these diversification strategies. Another point to make is that we do see generally a synergy between Bitcoin mining and AI HPC. However, when it comes to the applicability, it may or may not fit the bill for certain mining companies based off of their strategy, their location, their hardware infrastructure. It's a very complex equation to solve for. So it's going to be an interesting and open question for us as we go into the next mining cycle. We'll see how this plays out.
For sure. This is definitely one of the ones I'm interested to continue to look back on, and even this time next year and say, well, what happened in 2025? Because I think in a bull run, things start to correlate a lot more if Bitcoin price starts to rip. So we'll see.
Absolutely. All right, talking about operational updates. So the leading public mining companies expanded their hash rate under management massively over 2024. As of December, the top 12 public mining companies, as measured by market cap, had 265 exahashes per second under management, of which 230 were for self-mining. So this represents 24% of the global network hash rate by the end of 2024. When it comes to expansion plans, major mining companies have expressed absolutely massive plans for 2025. In aggregate, public miners have collectively advertised roughly 4.8 gigawatts of expansion for the new year. As we know, some of these plans may or may not come to fruition, and there's a whole host of reasons as to why this may be the case. It could be anything from construction delays, supply chain issues, and a whole host of other complications. So we look forward to seeing how the industry continues to grow throughout the next year.
What did you say? I think you said the average in 2024 was 30 gigawatts. Is that right?
Yes, total power consumption for the global network was estimated to be around 30 gigawatts.
Okay, so and if you're saying that in the pipeline, expected megawatts online are about 4, that moves us up, whatever 4 of 30 is, I don't know, 8 or 9%. So
Exactly.
we're probably getting closer to that Zeta hash with that. But this is information that is just from the pubcos, right?
Yes,
okay.
That's correct.
Okay.
Yeah, so this excludes the rest of the global network when it comes to, for example, private mining companies, perhaps nation states who are involved. So yeah, this just represents publicly advertised expansion plans by the largest public mining companies in the space.
Cool.
All right, coming towards the end of this journey, let's now look forward and talk about what we expect to see when it comes to Bitcoin mining. Key trends that we're looking out for at Hashrate Index and Luxor for 2025 revolves around 3 things. The first, as we mentioned, is the race between Bitcoin price and network difficulty. If Bitcoin continues to outpace network difficulty throughout 2025, it could be a very lucrative year for miners. However, if Bitcoin price falls, then higher network difficulty will mean that hash price will continue to be depressed for longer periods of time. So we believe that this is a key risk miners should consider hedging against in 2025 through the use of Bitcoin mining hash rate derivatives. The second key trend is around transaction fees, as we touched on earlier in the show. This is a wild card for hash price in the coming year. Like we said, since the halving, fees have been historically low and unexpectedly low. But as we know, block space markets are volatile. They can pick up at any moment, and it could be a very nice welcome production boost for miners throughout 2025. Finally, the last key trend that we're looking for is hash rate markets going mainstream in 2025. What we've seen through Luxor's derivatives desk is that volumes are at an all-time high when it comes to participation in the forward market. And we see mining companies interacting with the forward market in 2 key ways. The first is by buying hash rate directly, which enables operations to deploy capital and generate Bitcoin instantly without having to deal with the complexities of hardware. And the second is to sell hash rate forward and receive financing as a non-dilutive way of expanding your fleet operations. So we expect these trends to continue throughout 2025 as competition continues to increase and mining companies make use of the financial tools that have become available for them to grow and sustain their businesses. Now, finally, getting into our projection, Jarrett, you asked the question around expectations when it comes to end of year 2025 hash rate. So this chart here projects hash rate index's base case trajectory for Bitcoin hash rate and hash price throughout 2025 and into 2026. For those interested in more detailed analysis around how we obtain these numbers, feel free to check out Hash Rate Index Premium. We provide these reports on a quarterly basis, and they're available for our gold and platinum subscribers. Now, our base case anticipates a 53% increase in hash rate, and for hash price to range between $54 to $61 per petahash per second per day over the next 18 months. When it comes to the big question of when Zeta, our model is predicting sometime around the fall of 2025 and into basically between Q3 and Q4 of 2025. So this would represent the next order of magnitude when it comes to the cybersecurity aspect of the Bitcoin blockchain.
And thank you for that. I think that this is something that's very interesting. When Zeta, right? We used to ask when free Ross, and now we know. But when we think about when Zeta, what are things that could speed up that timeline? And then what are things that you guys see that could slow down that timeline? Well, some of the things we've already talked about that could slow down the timeline are geopolitical macro events. But what are some things that you think could speed up that timeline? And maybe we're there between Q2 and Q3 as opposed to between Q3 and Q4 of this year.
Excellent question. I think in terms of tailwinds, I would be looking out for developments on the regulatory side and institutional adoption, not only from corporate, but also geopolitical perspectives. If Bitcoin mining becomes ever more important for businesses and for regions, I think that will increase the speed at which infrastructure gets deployed. So that's one catalyst for a faster pace towards one Zeta, in my opinion. When it comes to the opposing forces, I think that seasonality may have a role to play. We tend to see some hash rate drop off when it comes to the winter months, when cold chills start to hit, and some curtailment takes place between the summer as well. So seasonality may have a role to play in slowing down the pace towards one Zeta hash at some point. And mining economics will have a massive role to play as well. Not to mention what you touched on and what Shannon touched on as well is the real bottleneck is energy and power infrastructure. Because at this point, mining companies have really found all the low-hanging fruit they can. So it's becoming ever more difficult to find appropriate locations and access to power to plug in your ASICs and start hashing, which I think will tone down hash rate growth as we get closer and closer towards that edge.
For sure. Can you also go ahead and just because sometimes when you're looking at these, it's not always easy to maybe see the exact data points. And I will say that later I'm going to post many of these slides on Twitter, so that way people could zoom in a little bit more. Can you break out the first data point? Because the first data point looks like it's January 31st of 2025, and it's about $54, and we're about at the hash rate that we are today, which is around 800. Am I reading this right?
That's correct. Yes, that's correct. Okay. So this projection model starts from the end of January, and it looks forward 18 months in advance, so all the way up to June 2026. And as we mentioned, nowadays we're at around mid 50s to 60s in terms of hash price, and around 800 for hash rate. And what we expect is a 53% increase in hash rate. So by June of 2026, to get over 1400 exahashes per second, and for hash price to, sorry, I meant 1,200 exahashes per second by the end of June 2026, and for hash price to increase as well, upwards to $60.
It's just so crazy that the hash. So we're just looking at this model because much of what we've talked about today is that relationship between hash price, well, really difficulty, right? Hash rate growth and the Bitcoin price. But here we
Mhm.
just boiled it down to two with hash price and global. That, from what you're saying right now, this may not be the most bullish image that maybe we've shared here on Mining Metrics, but it may be a more realistic image. And so in order for this to then continue to be profitable and competitive for pubcos and, you know, the person that has one miner up, what we're going to be hoping to see is that miners become, then within this context of what we're looking at, that miners, the hardware becomes so much more efficient. Is that what we're needing to make, you know, the sats and dollars make sense?
Absolutely. That's one aspect. And also, Bitcoin price action has a massive role to play.
Okay.
That's one input that is baked into this model, which readers could find out more about if they were to sign up to our premium membership and get access to the full report. Because there we break down every single input, and we also provide Excel outputs as well for people to play around with and kind of tinker with the model as well. So there's a lot of factors at play, and supply side factors are also incorporated into this model as well. For example, the rate of ASICs production and the failure rate of current ASICs, which are online and hashing around the world as well. So it gets as complicated as you would like it to get, but it's a lot more than just hash price and hash rate. There's a lot of factors that we've been considering in trying to model this trajectory. And it goes without saying, at the end of the day, all models are wrong. This is just one way for us to think about what may be happening and to express an educated guesstimate.
Perfect.
Awesome. That brings us to the end of this intergalactic journey. Thanks so much, Jarrett. This was super fun. And I will leave the audience with this beautiful picture of a few Bitcoin miners staring out into the sunset as we enter a new episode in Bitcoin mining.
I was one, and I wanted to ask you about this because I believe, what's the name of the Bitcoin mining review? Horizon something. What's the name of it? It has a nice thing that aligns with this image.
Yeah, so the report, we named it New Horizons. And the main reason is because we believe that 2024 was a turning point for Bitcoin and the mining industry in general. But 2025 is poised to be even better. 2025, as we look forward to it, we believe is going to be a strong year for Bitcoin and for the mining markets. So we remain optimistic, and we think that this picture of a sunrise or a sunset, whichever way you'd like to interpret it, is a nice way to represent this new phase.
Yeah, I love it. And I actually, it's your birthday. So I feel like, you know, depending upon the culture you're from, your birthday is either the day where you get praised or it's the day where you get made fun of the most, right? So I have no problem with putting you on the hot seat on your day of birth here. Who are these four people for you in Bitcoin or Bitcoin mining? And now I have to say you only have to choose three because one of them is Ross. He's free and he's looking at the sun. Who are the other three?
That's an excellent question. I would have to go with Satoshi Nakamoto, Adam Back,
Okay.
and if I were to give one more, I would say Hal Finney.
Amazing. And Ross is there too. Do we have any questions? I've been trying to follow the questions. There was a question here from Gandalf. Again, he's been very active. He says, on the topic of hash rate expansion, is it worth hosting one ASIC? And he said during this past bear market, and this is probably a question you and I could both address. It has been said that it's a waste of time unless you are not deploying at least one PH. What are you thinking on this? I could take this as well, but since it's your birthday, why don't you go ahead and answer this? Basically, and I think we can answer it looking forward. Obviously, talking about whether you should or should not have had Hash Online now 3 months ago is kind of irrelevant. I think the question is, should you have Hash Online? Is it okay to just even have one unit up right now? Obviously, I'm going to go ahead and interject. Yes, we believe it is true. This is what Compass was founded on. We were founded on a minimum order quantity of one. If you want to get hash up, go ahead and do that. when I'm in Massachusetts, I just can't get hash. I can't put a miner in the back of my house because the energy is too expensive that it won't be competitive. So for that, that's where you go to Compass Mining. Obviously, we are here to help. Minimum order quantity of one. You can get as many miners online as you want. But for you looking forward, how would you answer that? What is the value in getting one miner up? And maybe this is a great, if you want to go back and talk about the premiums and some of the payback periods and just some of the other financials that have to do looking at it just from a one ASIC unit level.
That's a good question. The way that I would frame it is it really depends on what your goal is, your objective, and your personality to some extent as well. If you're participating in Bitcoin mining solely for economic purposes, then the decision that you would make around purchasing or hosting an ASIC machine really revolves around a lot of calculations and cold-hearted facts. So you need to look at hash price, payback periods, returns of investments, other ways of measuring your capital expenditure and what you can earn in terms of getting this machine and getting it online and hashing. But there may be other reasons why you participate in Bitcoin mining as well. You may be interested. You may just find it to be fun. You might want to be collecting Satoshis in a sovereign way, receiving them directly on chain. So it really depends on why you want to participate. But my personal opinion would be that the more hashes, the better. So plug in those machines, as many as you can. It makes everyone happy.
Absolutely. And I think just as we kind of come to a close here, we're at the hour mark. We want to make sure people can get back. This is unfortunately blocking you on screen, but it's someone else saying, Stefan here saying happy birthday. So I think that's a good way to end this. Happy birthday to you, Kaan. Thank you so much for joining me once again. And before we go, I want to call it the next date of our next mining metric engagement here. That's going to be on February 19th. We're trying to go every third Wednesday. That may or may not change as we move forward, but definitely a monthly show at this point. So we'll see everyone on February 19th at noon Eastern. We'll be back on. I think we'll be maybe back on our regularly scheduled programming because we won't have this kind of end of the year dump of info that has been wonderful alpha. So anyways, Kaan, thank you so much for joining, and everyone watching, please go ahead. Make sure you're subscribing to Compass. Make sure you're following Compass. Make sure you're following Luxor across their socials as well. We're out here in mining doing the work. So thank you so much, Kaan.
Thanks so much. Glad to see you, Jarrett. Until next time.